Outsourcing. Question: did your business outsource any of the following AML/CTF functions in the previous year? Customer identification, AML/CTF program development, transaction monitoring, transaction reporting. None. For the purpose of the compliance report, outsourcing is considered to be entering into an agreement with a third party to undertake aspects of the AML/CTF program on your behalf. Includes using any overseas businesses, even if this business is related to your business. Exclude using a domestic business that is related to your business. Exclude use of third-party software applications and lists. Transaction reporting. Ongoing reporting obligations include threshold transaction reports. You must submit threshold transaction reports or TTR for transfer of $10,000 or more in cash or the foreign currency equivalent. TTR are due within 10 business days after the date of the transaction. International Fund Transfer Instructions or IFTs. You must submit international fund transfer instructions for transfers of funds of any value into or out of Australia, made either electronically or under a designated remittance arrangement. IFTs are due within 10 business days after the transaction instruction is sent or received. Suspicious matter reports or SMRs. You must submit suspicious matter reports when you have a suspicion that a customer or transaction is related to criminal activity. You must submit your report within 24 hours of becoming suspicious if it relates to terrorism financing, or within 3 business days for anything else. Other reporting obligations. AUSTRAC compliance reports. You must submit compliance reports to AUSTRAC when required by AUSTRAC. These reports tell AUSTRAC how you are complying with the AML/CTF Act, regulations, and AML/CTF rules. Cross-border movement or CBM reports. You must report cross-border movement of physical currency of $10,000 or the foreign currency equivalent or more if you carry, mail, or ship money into or out of Australia. You must submit your report before sending or carrying the cash out of Australia or before carrying it into Australia. If you receive cash sent to you from overseas, you must report it within 5 business days. Question: have you checked the program is tailored to your business and its MLTF risks? Question: do you have an AML/CTF program? Note: if your business operates as a sole trader or an individual, you are still required to have an AML program. As a key takeaway, the AML/CTF program is a living document and not set and forget. The risk assessment must be current to new risks arising from products being provided, new customers engaged in those products, and new markets and opportunities the business is engaged in. In circumstances where there are global programs and operation, risks and obligations specific to Australia need to be documented. Businesses should be actively seeking review, audit, and assurance, and for that to be simply more than words on paper, but the practices in operation. Question: when was Part A of your program most recently independently reviewed? In the last year? Within 2 years? Within 3 years? More than 3 years ago? Program has not been independently reviewed. An independent review is an impartial assessment of Part A of your AML/CTF program. It checks that you are complying with your program, and that is, properly addresses your money laundering and terrorism financing risks, complies with your legal obligations, and is working as it should. The independent reviewer must be someone who understands your business or organization, understands MLTF risks, was not involved in any part of developing the program, including assessing your money laundering and terrorist financing risks, developing controls, or implementing or maintaining the program. The reviewer can be someone within your organization or someone external to it. An example of an internal reviewer might be an auditor within your business who does not have a compliance role. An external reviewer might be a lawyer, an accountant, or an AML/CTF consultant. Question: did you report internally to the board or senior management on any of the following matters in the previous year? AML/CTF risk awareness training statistics, AUSTRAC engagement feedback or guidance, changes to MLTF risk assessment, independent review or remediation, newly identified risks, performance of outsourced functions, staff compliance or non-compliance with AML/CTF program or policies, transaction monitoring information, internal AML/CTF statistics, AML/CTF uplift activities, did not report internally to the board or senior management regarding above matters in the previous year, or other matters. Reporting internally means informing your board, senior management, or equivalent through a recorded notification. For example, email, written brief, or minutes of a meeting. Question: did you do an MLTF risk assessment of your business in the previous year? Customers, the type of customer. For example, an individual, sole trader, or company. New customers. Customers who want to carry out large transactions. A customer or group of customers making lots of payments to the same recipient. Customers who have a business which involves large amounts of cash. A customer whose identification is difficult to check. Customers who use large amounts of banknotes and/or small denominations. Products and services. Remittance service, gambling or wagering account, superannuation fund account, digital currency exchange, banking products. Business practices or delivery channel, face-to-face, online or internet, phone, email, third-party agent or broker. Countries or jurisdictions. Any country or particular region of a country in which you may do business. Any country subject to trade sanctions. Any country known to be a tax haven, source of narcotics, or other significant criminal activity. Question: was this risk assessment documented? In the next video, we'll go through questions on employee due diligence, AML/CTF training, and customer population from the AUSTRAC compliance report.